We are back. To item 3, we're rising and reporting from closed session. And we will move on to the acknowledgement of traditional lands.
The land upon which we work, live, and sustain ourselves is the ancestral and treaty lands of the Michizagig Anishinaabe, also known today as the Mississaugas of the Credit, the rightful caretakers and title holders of this land. We also recognize the rich pre-contact history and relationships which include the Anishinaabe and the Ongwe Hongwe.
Since European contact, this land continues to be home to Indigenous and non-Indigenous peoples. As responsible community members, we value the diversity, dignity, and worth of all people.
Colonialism displaced and dispossessed Indigenous peoples of their ancestral land
and continues to deny their basic human rights, dignities, and freedoms.
We are committed to learning true history to reconcile, make reparations, and fulfill our treaty obligations to the original peoples and our collective responsibilities to the lands, water, animals, and each other for future generations.
Thank you for that. Item 5 is the approval of the agenda. Mr. Sinnott, can you do this? All in favor of the agenda?
Aye.
We have it. Great. I will pause for declarations of conflict of interest. I see none. We will go on to item 7, approval of minutes of 7.1 of the audit committee meeting of September 21st, 2023. Any issues, complaints, concerns? Seeing none, all in favor? Got it.
Aye.
Okay, right. So now we have delegations. I did not receive any, and so we will move on to item 9, which is reports from officials and staff. Item 9.1 is the draft consolidated financial statements. And Tanya, you have the floor.
Thank you, through you, Chair. So first of all, I want to thank staff that's here. So, I mean, this is only some of my staff, but certainly if we love them a bit. However, Chi, who is the senior manager, and Katha Garsagi, who is the assistant controller. And we've had a lot of challenges this year and a lot of last minute things. So I do appreciate all the hard work that's gone into it. And certainly thanks to BDO for bearing with us as usual and thanks for a lot of last minute things as between what's happening with the ministry. So I'm going to go through just some high level items just to create some understanding of the high level changes. So I know it's the financial statements look relatively large, but I'm going to try and just okay, so I'm going to just use this to show what page I'm on, but you're probably not going to be able to read what's on here. So I'm going to start with the consolidated statement of financial position. So basically for, I guess, old timers like me, I call it the balance sheet. I still like that terminology, but anyway, so in here it talks about basic our assets and our liabilities. So if we're looking at the first line, which is our cash, you'll see that there's been a significant increase in cash over last year. So basically what a balance sheet shows, a balance sheet it is a point in time. So it's showing the difference of where we were at August 31st, 2022, and then August 31st, 2023. So it's at the end of the year where we were in both of those points in time. So between August of last year to August of this year, there's been an increase of about 51 million in cash and cash equivalents. The main driver of this is we had 4 property sales in a year. So that was our biggest driver, as well as I've mentioned in past that the ministry has something that they call delayed grant. And so again, they will do adjustments through the year. And last year, because of some of our reductions, they did release some of the delayed grant. So we actually got some of our own money back. And that was about $10 million. And that's kind of netted because we also did a land purchase. So that's the biggest impacts that we've had in terms of cash, other than our capital spending and our normal operating. The next one is accounts receivable. There's a smaller change here, year over year, And this is predominantly looking at what's happening is that at the end of this year, we had a little bit more receivable for our municipal taxes. And that's generally just a timing thing because we get monies from municipal taxes or the ministry for our GSM. So depending on how that falls and when they send the monies, there can be a difference in our receivable. In terms of the accounts receivable for Government of Ontario, there you can see there's a reduction of about 27 million. And this receivable encapsulates anything that would be outstanding from our grants for student needs, any types of for the ministry, as well as anything from our capital spending. The reason that there is a significant decline is predominantly because the ministry owes to us our debentures again. So in the past, we had our capital funding was funded through debentures, and so as we pay the debentures, they fund us. So that's a receivable. So at the end of this year, we had made repayments of about 35 million that they had funded, and so we receive those funds and then we pay the debentures. So that is the biggest decrease here. Going into the liability section, which the first one is temporary borrowing. So that is basically our EDC loan. We call it borrowing because again, it's a short-term nature. We re-sign every year. And it's going down because again, as we sell any property that had an EDC component, we have to put it against that loan. Additionally, anytime we receive EDC revenue during the year, we also put it against that loan. So that's been drawing down that amount. On the other side, anytime we do land purchases, we actually increase the loan amount. So the net amount this year is an overall decrease of $60 million. Accounts payable, again, there's been an increase here, about 27 million. The main reason for this is that the ministry has asked us to record what they call a provision or a liability for salary, retro salary that potentially would have to be paid in the most recent collective agreement. So they've made a potential estimate. So that doesn't necessarily mean that is exactly what's going to be settled on. So it's a little bit different than what Marcus was mentioning earlier about the Bill 124. This is actually about the current contract agreement that is being negotiated. So this 18 million would pertain to the current year, so 2022-23 that would potentially be owing. So the ministry has flowed us the money, but technically it's owed to staff once that agreement would be settled. Deferred revenue has increased by 64 million. As I mentioned, from a cash perspective, we sold 4 properties, and sale of properties, we actually defer that revenue so that we can use it in future for similar purposes. So the sale of the properties, the cash was in the cash aspect, but then from the liability side, it's under deferred revenue. Going down to net debenture debt, this is where, again, debenture repayments happened this year, about 35.5 million, and so that's continues to decrease our debentures. And we're no longer funding capital purchases through debentures, so that will continue to decline. And then we look at deferred capital contributions. That's through here, we look at our capital purchases net of our amortization. And so in this year, we had capital spending higher than our amortization by about 22 million. So we had capital spending of about 119 million, and our depreciation was roughly about 97 million. So that's kind of the difference. Sort of jumping down to inventories of supplies. Again, typically we don't have inventories, but through COVID, the ministry did ask us to start carrying inventory of PPE and put it on our balance sheet because there were significant amounts. And again, these are being drawn down. So in year over year, we've used about 4 million of that PPE, and that's why the inventories come down. And then going to tangible capital assets, that is their assets, and that's where we have had, again, higher additions over our amortization. And so there's been an increase in our tangible capital assets of about $25 million for the year. So that would be our statement of financial position. I can take any questions on this if we're going forward.
Do we have any questions, committee? Seeing none. Please
Okay.
continue.
So, oops, starts real quick. Okay, is that the right one? Okay, I think it is. Can't read it that far away. No, it's not the right one. No, this one. Okay. So this is oh,
Sorry, I'll zoom in so it's easier to read.
okay. So then the next page is the one I'm going to go over is really our operating statement of operations. That's our revenue and expenses. So in the top section is our revenue. So again, I'll just go over some of the highlights. So I would look at the first two lines together, the grants for student needs. And the ministry has asked us to split that between the provincial legislative grants, which comes from the ministry, versus the education property tax, which is what we talk about, the municipal taxes. And so from this perspective, there has been an increase overall. However, most of that increase is a transfer of about 20 million from our provincial grants, which is where we have other types of provincial grants, which are called priorities and partnership funds. So there's about 20 million that was transferred flowing from that kind of bucket from provincial grants other to flowing through grants for student needs. So that's just a flip there. And additionally, I think I mentioned when we were looking at the balance sheet is that there's an additional 18 million that was flowed to us as potential salary payments upon settlement of the labor agreements. So that's an additional 18 million that flowed us through there. Just to recognize that, you know, if we were to take those elements out, our revenue obviously would be declining because we do have declining enrollment, but those aspects do make it look like we are increasing in our GSN line. Provincial grants other, that is a decline. And again, for much the same reasons I mentioned above, 20 million came from this line and went to GSN. As well, last year we had PPE grants that were kind of one time that flowed through provincial grants other, which was about 17 million, and that we no longer are getting the PPE grant, and that's been offset. We did get a remedy payment that we did have to pay for at EDFO, and that was 12 million. So the net effect of all those is a decline of 27 million. School generated funds, those are the funds that the schools raise in terms of when they do field trips, when they do fundraising, all those things. And you can see by the number over last year that there's been some recovery. You can see from the budget, we thought there'd be a slightly higher recovery, but it has definitely recovered quite a bit from the prior year, about 14 million. Investment income, I'll speak to next, is about $4.5 million increase. And really that increase is related to higher interest rates and also the fact that we did have higher cash balances this year. And then going to the last one under revenue, we look at fees and revenues from other sources. That's lower than in prior year, and that's because EDC revenue actually ended up being lower this year by about 13 million over last year. Moving down to expenses, you will notice that there is a very incremental increase in our instructional line, partly because overall actually our enrollment's down, so there has been lower amounts in terms of our teaching costs. But on the flip side, we've had higher costs in terms of our supply teacher costs. So the net of the two, we're just about $4 million higher than last year. But from a budget perspective, we are higher again because of the supply costs that we've had this year. Moving to transportation, again, transportation looks like it's only slightly over in terms of both our budget and last year. However, it is actually about 7 million over our actual funding, because our funding for transportation is about 53.5 million, whereas our expenditure are 60 million. School generate funds, we, again, this is the flip side of the revenue. So again, whatever the schools take in, they do spend on kids. So that's kind of an offset. And so therefore, you notice that there was an increase on the revenue side. So there's a similar increase in the expense side due to higher activity. The last line in expenses is showing that syndicated other. And again, here are sometimes we I guess put sort of some unique things that have happened or we've been asked to do. So in this line, the reason it's gone up about 13 million is because again, the ministry, when they asked us to do the provision for labor, we've been asked to put it here. So that's $18 million, as well as when they provided the remedy payments for EDFO, that also flowed through this line, as well as the decrease in the PPE that expenditures that we had. So that makes up the overall net increase of 13 million. That brings us down to an annual actual deficit for this year, so a financial deficit. So the financial deficit is 13,678,000. So that's the financial deficit. I just want to point out that from ministry perspective, that's different from our compliance deficit. So our compliance deficit actually is higher. So our compliance deficit is about 30,860,000. Happy to take any questions.
Trustee Cameron?
Thank you. Lots to digest here, and can I just clarify? Our school generated funds, do they come from parent council, Women's School Association work, or is this school doing this?
Through your chair. So all of the above. So they come from school council if they do fundraising, because that has to flow through the school. In terms of home and school associations, if they're doing something in the name of the school, then it should flow through this. If they're doing something that is separate from the school, then they do have the ability to have their own bank account. So it depends on the kind of work the home and school council does. But in terms of other things that would flow through here would be all the field trips, all the pizza that the schools are doing. So anything that the school generates itself, and that's why for the most part it nets off. So because it's supposed to be, we're not in the money making business, whatever they collect is for a specific purpose generally from the schools.
Okay, thank you. And the second question I have is fees and revenues from other sources. Would they be things like rentals?
No, so from one from other school boards or other sources?
Sorry, from other sources.
Yes, so yeah, that would include things like rentals as well. So it'd be rentals, I said other things that we have, the EDC, yes, things that are not typical of our typical business, which would be the transfer students and the ministry.
It's just, I don't have this as a fact, but I would have thought that our rentals brought in more than that, because all of our schools are topped out. And I know this from parents or organizations that are calling to ask for greater opportunities to rent, but they're already booked. And
so through Chair, Trustee Cameron, I believe our rental income last year was just close to $1 million. So it's only $1 million out of the $37 million is the rental income.
oh,
And a big portion of that, I believe, is the EDC funds that which Education Department charge. I just wanted to clarify that this rental income is very small portion of that income that you see there.
Yeah,
Thank you.
through Chair, I don't think that last year we fully had the weekends open.
Right.
So again, this would be 22-23, so I don't think it was fully open the weekends either. So I don't think our rental revenue was also recovered fully. So I think it improved, but it didn't fully recover from prior years.
thank you.
So any other questions on the revenue?
Any other questions? I don't see any. So
Okay. So other than that, I just want to point out a couple of notes that, again, just for people's information that are new or added. So under significant accounting policies, there's been some addition to the use of estimates note 1M.
Is it back up?
No, it's on. Am I moving or are you moving?
No, you can.
I wasn't sure, because I'm pressing. Let's go. I wasn't sure. Okay, This is, it's not a PowerPoint, so, yes. Lots of notes. Yeah, so the first note one really talks about significant accounting policy. So it just talks about how we do our accounting at the board for all the different things. So in here, I was just going to point out that at the bottom of page 12, there's been an addition that talks to about asset retirement obligations that were mentioned earlier. Then going on to 1P, there's additional note disclosure of financial instruments. And then we have note 2, which talks about the various change in accounting policies that have been reflected in these financial statements. And on page 15, we talks about this change specifically around the ARO. And so this piece is relatively lengthy, so I'm not going to go through it. But then you can see there's some calculations as well that follow it on the next page, and that's related to the adoption of the ARO. Other than that, I just want to maybe have note. I'm just going to want sort of the newer notes in case people wanted to know where they are. Note 6 again talks about our asset retirement obligation, as well as note 7. And then let's see whichever ones we have. The other notes have we've had them in before, they've just been updated. I wanted to just look at okay. So note 7 is our expense by object. So this looks at our expenses broken down in a different way. So again, that's and we've had that in prior years as well. So if anybody has any questions on that. And then note 15D will show you that we talk about sale of assets, so those are listed here. The land sales that we have. And then I wanted to talk briefly about note 17. So note 17 is about OSB, the Ontario School Board Insurance Exchange. So I think we had talked, I don't know if it was last year, where the ministry had indicated that they thought that, or actually it was the Auditor General that had made a request that OSB be consolidated across all boards. And there was some difficulty in doing that. And so now there's no disclosure that basically indicates that, in terms of OSB, and that obviously they're still looking at that. And so we will look at other things to come. So OSB is our insurance company that is a cooperative across all boards. So now there's specific no disclosure about that. Note 20, again, because we did the ARO, and that was this, there's significant materiality with respect to the ARO. We had to restate last year's numbers, budget numbers, and so note 20 goes through that. And sorry, this thing is just not going very fast. I think am I going backwards? Am I going back? Okay.
20?
Yeah. How are we going to 25? Yeah, so yeah, I think so the number 25 is our financial instruments risk note, which is new. And then note 26 is future accounting standard adoption, which is new. And the last one I want to talk about is the one that I just did hand out, and that is note 27. So this one I just want to spend a little bit of time on, because again, this was a last minute addition, and I know that Marcus did speak to it. So Bill 124, again, there appears to have been an agreement that's been reached, but I guess it will not be fully implemented until they go I think they have to still go in January to have it decided. So anyways, so to that point, the ministry has asked us to include this note. And if you see, it will require us to potentially pay 0.75% for 1920, 0.75% for 2021, and then, sorry, and then 1.5% for 21-22. So that gets agreed upon. And so at this point, we're not providing the dollar value within our financial statements, because as mentioned, should this come to pass officially, then we will be provided both the funding and as we're paying it out. So just wanted to draw attention to that, because we are going to include this note, and we also will be providing the ministry with an estimate of that prior to the end of November. I think December 4th is the date we have to provide them an estimate. So any other questions?
Trustee Cameron?
Thank you. Soon we're going to be organizing our budget development committee for next year. Does this report go to the board for receipt or approval?
Through your chair. So the financial statements from the audit committee, once approved, the audit committee would go to board for approval. And obviously we also submit them to the ministry.
It strikes me that whoever's on budget development should have all of this in front of them as they move forward for consideration for the next budget as well. It's more of a comment, I think.
Yeah. So through your chair, Trustee Kevin, when we had the budget development committee for the next school year, we could ask them if there's an interest. At that point, it probably would have been approved by the board and submitted to the ministry, but for information we can always share with them.
Thank you. The second question I had, and I appreciate you may not know this specifically, but you mentioned in an earlier part of this report, we purchased some land.
Yep. Yeah, was that chair? Yes.
Was that for a school? Was it for track and field?
For school.
For school.
Sorry? Oh, Brown West, I did.
Okay. And that's upcoming soon, you think? Yes, excellent, thank you. And my final question is about Osby Insurance. I know our students are all offered an opportunity to purchase individual personal insurance, because I know in my area, we've had some students who didn't purchase it, and then they got started playing a sport. And the question was arising about potential liability just after their injury, what happened, but they could have been covered easily if they purchased the $17 insurance. Is that this?
So the reference the reference to Osby, that's our board specific insurance that's insuring us for various areas, or like property insurance and things like that. So it's a board insurance.
So again, through the chair, Davies, Trustee Cameron, Osby, they do offer a number of products, insurance products, and many boards in the province do go to Osby for all those products, the property, liability, motor vehicle, and all those type of insurances. In our case, we do want to make sure that the rates offered by Osby are competitive with if we go on our own, based on our size. So we do have some products with Osby, where the other ones where our cost can be lower, we do go out and acquire through a third party, another party insurance provider, those insurance. For example, the liability is not with Osby, because we can get at a lower premium outside from a third party provider than Osby. So I believe offering to the student insurance, I believe is to a third party insurance, not through Osby.
Thank you. Thank you, and I appreciate the difference. You're talking about insurance here with Osby that we have to purchase from them. The student opportunity is for them to purchase this for themselves, and that's their cost. But when I hear liability, threats, and fears, I worry. But the offer for the student insurance is an option for people to buy, and I encourage everybody in my area to definitely consider it. Thank you.
I did see a hand up earlier from trustee Alves. Was your question answered?
Thank you, Chair. More of a comment, just wondering to Trustee Cameron's point, would we be able to refer this package for receipt to that budgetary exploration committee so that they would have it? That was my only thought to Trustee Cameron's point. Thank you.
I think that was covered. Yeah, fantastic. Any other questions? I believe Associate Director Gill has a copy of this for me to sign, so any relevant questions, I'd like to have them on the floor now.
Thankfully, this is consolidated.
Yeah, no more questions. That's fantastic. Can we put this on the floor for approval? Trustee Cameron? Do I need a seconder for that?
Yeah.
Yes, I do. Okay, Trustee Alves is always ready and willing for that. All in favor of 2, 3?
Yep.
We have it. Yes, we have it. Fantastic. Okay, so now we're on to item 9.2, which is the audit committee work plan. And this is for information, but I know you have the floor again.
Yes, thank you, through you, Chair. So again, the audit work plan is our typical document that we kind of walk through to ensure that we are following everything mandated by the Ontario Regulation 36110. So actually today's meeting does cover off a lot of items. So certainly it talks about our financial reporting process in section 9.1. As well as the duty to internal controls under 9.2 with respect to the reports from REACT as well as our own internal audit, and as well as the work that video does on in terms of internal audit as internal control as well. Section 9.3 talks about specifically regional internal audit, and I believe Paula will have a report later on in the session. Section 9.4, again, is most of the work in terms of external audit that's being completed today. And in terms of compliance, we also we'll be looking at the director's compliance letter later in the meeting, which is covers section 9.5 and 9.6. Additionally, we have looked at the report that will go to the board in terms of the audit committee's work. So that's part of section 9.7. And additionally, we will also have to submit to the ministry a report about the audit committee. And so that's section 15.2. And then again, 15.3 talks about submission of the report to the board about the audit committee's work for the year. So happy to take any questions.
Certainly don't see any, so that is fantastic. We'll move on to 9.3. Oh, we have to receive this. Yes, okay. Well, put on the floor. Okay, all in favor of receipt? 2, 3. We have it. Thank you. So, item 9.3 is the compliance report for fiscal year 22-23. This is Associate Director Gill.
So, through you, Chair Davies, on behalf of the director, I can confirm that during the 2022-23 fiscal year, nothing has came to our attention that would lead us to believe that the board was not compliant with the current federal provincial acts, regulations, and institutions.
Thank you very much for that. Okay, I guess. So can we have a quick, anybody having problems with that? Can we approve that as well? Thank you. Great, we have it. So now we will move on to item 9.4, which is the Audit Committee Report 22-23. That goes to the Ministry of Education.
Thank you, through your chair. So I mentioned this is the 22-23 Audit Committee report that will be going to the Ministry of Education, and this is in accordance with the Ontario Regulation 36110. What must be reported is the work performed by Regional Internal Audit, as well as if there's any enrollment audits that are planned within the long range plan. So the report is before you have any questions. Actually, this year as well, this will be submitted through the ministry system, I think it's called EBIS. So even though they've now automated it, so this is before you, but it will also be submitted electronically to them through their system.
Any questions on that? Okay. Seeing none, can I receive this, please? In favor?
Aye.
Got it, thank you. Okay, we'll move on to item 9.5, which is the PDSB READ update, and this is presented by Paula.
Okay, thank you. Through you, Chair, agenda item 9.5 is our regular status update on READ activities. So it's a short update at this point as we're relatively current. We are in the process of kicking off last year's remaining audit that's been deferred until now. And we're also looking to start the current year's audits later this year. Now, we're also finishing one follow-up. We have an auditor that is dedicated to follow-ups who is rotating through the boards in our region. So we will be looking to complete more follow-ups again a bit later in the year. Now, before I do hand it back to the chair, I also wanted to just touch on another matter. So I know there have been some questions on READ's capacity and whether the ministry would provide additional funds to increase our capacity. So I just wanted to give you a little bit of a background on our capacity and audit selection process. So as I mentioned at the last meeting, our mandate from the ministry is to complete 2 audits annually at each board in our region. So in order to determine which engagements to select, we complete a risk assessment every 2 years, as is required by our professional standards. So this includes looking at the major risks to the board based on our own knowledge of the sector as a whole, and as well through our conversations with relevant members of the senior leadership team to understand the risks specifically related to Peel District School Board. Now, from there, we determine the areas where we can provide value through our engagements. So one way that we can provide value is by completing an engagement that will give assurance that things are adequately controlled. And we also, through that, the audit, provide some suggestions for improvement, like we did through the device distribution audit that was presented back in September. Now, another way we might provide value is through an advisory engagement that is specifically designed to help improve processes and controls, like we did with the legislative compliance engagement that was also presented in September. Sometimes there might be a higher risk that is identified related to a particular area, but we defer work to a future plan or future period because there is work that's currently underway to improve a process. So an example of this is the cybersecurity audit. So we were looking to do this audit a few years back, but management was actually in the process at the time of updating processes and controls, so the engagement was deferred to this year. So once the audit plan is drafted in consultation with management, we do bring it forward to the audit committee for approval. And the audit committee has the opportunity to review the proposed engagements and either approve them as is or request that we look at another risk instead of something on the proposed plan. And that happened the last time that we brought the plan forward, and the guidance counselor audit was added to the plan. So as we move to the second year of the plan, I did, in this last September meeting, provided you with the opportunity to review what engagements were on the plan for the second year, so that you had the opportunity to review them and if there were any changes, propose them. So this is something I'll be doing going forward every time we hit the second year of our 2-year plan. Now, once a new plan year starts, we work to schedule the engagements and get the work done. Now, sometimes we're not successful in getting engagements completed within the year. And part of this is due to historical capacity issues with our team. So we did have some staffing issues when I came on board 5 years ago, and we did get a bit behind. And then once the pandemic started, we also had some delays in our work as boards were dealing with obviously some very important competing priorities. Now, although we do have the capacity now, we also need to make sure that we have the board's buy-in and their commitment to start an engagement. And that can sometimes be difficult to get because there are a number of other issues that boards face. Say if there's suddenly high turnover in a department, if there's an internal project that the department has started working on, or, if the board is responding to, say, a ministry directive or a request from the Auditor General. So, we are cognizant that oftentimes there are other priorities that a department is working on and they can't get to us, at the immediate now. Now, we have included in this update what the REACT currently has on our schedule. But if the committee does identify another area that you would like to see audited or that would benefit from a consulting engagement, we do have some funds that are set aside for this purpose, and we can bring in a third party to complete an engagement. So these extra funds were set aside because boards in the first few years of the REACT, when the REACT was just ramping up, there were fewer audits done on each of the boards in the region. So there was a bit of a pot of money that kind of accumulated. So these funds were set aside. And the use of these funds is up to either the audit committees or management. So if you do identify the need for an additional engagement, either now or at some point in the future, please let us know what you would like to have done and we can move forward. So that does conclude my update, but I would be happy to take your questions. Thank you.
Thank you so much for that. Any questions? I do not see any, so that is fantastic. Can I have a vote for receipt of this?
Yes.
Cameron, yes, Liz, and yes, we have it. Thank you very much. And so now we will move on to item 10, which is committee member motions for consideration. I didn't see any. Item 11 is committee member notices of motion. I did not see any. And before I call for item 12, I just want to thank everyone for putting up with me for this year as chair of this committee. And don't know who will be here next meeting, but fantastic. I've really enjoyed myself and thanks for coaching me along. And so now I will call for adjournment. Trustee Cameron has it. And all in favor?
Happy to say aye. Happy to say it.
We have it. Thank you very much. Bye.